Hello and welcome back to, well, this isn't really a fundamentals, it is kind of a fundamental question. We're going to take a look at selling stocks short because there's been a lot of talk about what's been going on with GameStop and this hedge fund that has really bit it in the butt now that the price has gone from, like, I don't know, somewhere around $30 a share to 300 and something dollars a share. And I want to take a look at how this works. So first of all, what is shorting a stock? I mean, the thing is I will borrow, like, let's imagine it's an apple instead, and I borrow an apple from you. Okay, and apples cost $1. Okay, and I'm gonna sell this apple for $1, but now I owe you an apple, and I have to give you an apple back in a few at a future date. I might even have a contracted time by when I have to give this apple back to you, but not necessarily. Okay. And what happens is I want to buy an apple at a lower cost, like 50 cents. And so now I bought an apple for 50 cents and I give this apple back. And now I've made 50 cents on my apple deal with you. Right? You're happy because you still have your apple. You probably also made a little bit of an interest rate on this deal. I've paid you a commission, and maybe I've made like really 48 cents instead of 50 cents. And yeah, everybody's happy. And usually these deals are done through brokers. So I have my broker, my stock broker, and I have his portfolio of stocks, and I have allowed, like, say on TradeStation, which is the online broker that I use, I've allowed them to lend my stocks to people who want to short them. Okay, so what does that look like here? Well, let's take a look at this. I mean, when we consider all the news, right? GameStop, three largest shareholders earn over $2 billion. GameStop stock stores. The question is, should I get in? How far from GameStop to game over? Yeah, that's a good question, because if the reason why the hedge fund got involved is because GameStop is not in a good position. They can expect to sell the stocks at a lower price. The problem was that they oversold their position. I've read somewhere between 140% to 150% of all available shares were being shorted. I'm not entirely sure how that's possible, because I mean, it must be because they're an institutional trader. Because I, as a retail trader, if we take a look at take a look at a gap list. When I'm looking to trade a stock, I take a look at a gap list. Okay, and this gap list is going to show me stocks that are trading as dollar gainers. Okay, in one day. And these kind of are bouncing around here. GameStop was on this list previously. And what I saw about GameStop that stopped me as a trader from trading it was that it had already gone up 97%. So as a day trader, I'm not interested in a stock that's going crazy like that. I'm looking for stocks that have gone up about 4%, 2%, 1.5%, something like this. Let's see if we see the 1 week gainer or a 10-day gainer. You can probably see GME right here. Okay, well, it's changing a bit now. And you got to understand that GME is offered on the New York Stock Exchange. Okay, well, if I'm looking at what's happened to GME on the weekly chart, right, this is an explosion from $40 a share up to, yeah, 380. It's insane. Okay, and this has been done. They say, okay, these redditors, these people have come in and they bought all the stock. And it's possible because the hedge fund had taken up all the available shares, and more, and nobody else could sell the stock short. So it's easy for buyers to come in and take command, and because there's nobody left to short the stock, the hedge fund is shorting everything and more. Now, I, as an institutional trader, I can't just short a stock or buy a stock at any price, right? If I'm buying a stock at a specific price, I have to have shares available at that price, right? So maybe I want to buy GameStop at $325. Well, if there are no shares available at that price, my order gets skipped. I don't get in. So I use what's called a stop limit order, right? And I'll make a range of say 24 to 25 at 324 to 325. That's a huge range. I would make a range of like 5 cents or something as a day trader. The point is now my order can be filled in this range, but I'm still restricted to the number of shares in existence, the available shares. So the fact that this hedge fund could short 140% of all shares available is ludicrous. It's a regulation problem. It had to have been done through brokers. If we take a look at the daily, this is what it looks like on the daily. This jump up, you can see this big bottoming tail and a bit of a topping tail, right? We're running into a limitation of how far the price can go up, and we've got a lot of resistance against the price coming back down. Okay, but if we were looking for an entry in here, I'd be looking for something maybe on the 15-minute. I am not gonna touch GameStop because it's a failing company. Its business model is 20 years old. It's not likely to continue to go up. In fact, it's likely to go down. And what's even more likely to happen is it's likely that we can see that it's likely that the New York Stock Exchange will halt the stock. And if it halts the stock, and let's say I bought it at $100 a share, and it's gone up $300, I've tripled my money. Great, wonderful. And I have a stop loss at, I don't know, 275 because I want to protect my gains, and I'm hoping that it continues to go up. Well, the thing is if the stock gets halted and the price gaps down below my stop loss, I lose more than what was my stop loss, right? I mean, if it gaps down to $60, instead of making money on this stock, I'm going to have lost $40 per share, right? So that's the real danger here, and we have to understand that the institutions are going to be protected in ways that we aren't. They are, a hedge fund can get a bailout. We won't. We won't get bailed out of anything. And the market, the New York Stock Exchange, is likely to protect hedge funds against this kind of price manipulation because it is price manipulation. They're going to protect the hedge funds by halting the stock. So be very careful about extreme cases like this. This is not normal, and there are the exchange exists also to protect the market against these extreme situations. Okay, so there's a little bit about shorting stocks, about the GameStop situation, and why at this point, if you haven't made money on GameStop, don't get in now. It would be a big mistake. It's way overextended, obviously. And if you've made money, I would sell as soon as possible, even in the pre-market. Get out of it now, and thank the stars. All right, catch you next time. Bye.